Foreign businesses are gearing up for travel into China following the country's surprise relaxation of its strict COVID travel restrictions and border controls. Business groups and analysts say this could help boost foreign investment. But as Olivia Xiong reports, China's post-COVID economic recovery could still take some time.
It's full steam ahead for staff at this migration agency in Beijing. The Singapore-headquartered company has been ramping up preparations after China announced it would scrap lengthy quarantines for inbound travelers and relax other travel restrictions from January 8. It's expecting a 30 to 50% boost in business this year as clients are able to visit destination countries more easily and company leaders resume regular business trips to China after the Chinese New Year.
I'm definitely going to fly in because I know that the face-to-face value is really very important, and I know some of the clients, they really want to hear from like maybe myself or some of my colleagues here in Singapore.
Mr. Cheng said business had taken a hit in the initial stages of the pandemic, forcing the company to shut 3 of its 5 offices in China and lay off staff. It also had to stop in-person seminars, which it used to hold fortnightly prior to the pandemic. Mr. Cheng is hoping some of this can resume, but also to personally assess how China has changed in the last 3 years.
I think the business model will have to change. Yeah, so I don't know whether having like a large group of people in a single room, whether that will still work in China. Of course, we have to test it out.
Other foreign business groups say China's reopening had been highly anticipated and will boost business confidence. It would also help in getting more investments into the country.
If you can't have senior management come, it makes it very hard to get the attention for additional investment. Number 2, there's a lot of concerns about supply chains, and there's a lot of concerns about U.S.-China relations. When you can have people come and have face-to-face meetings, people-to-people exchanges, that will really help.
But it could take some time for China's economy to recover, as China still grapples with the impact of its sooner-than-expected relaxation of zero-COVID measures.
While life and consumption slowly returns to normal in big cities like here in Beijing, where health officials say infections are past the peak, other experts I've spoken to, though, say that this COVID wave is far from over as the virus is expected to spread to smaller cities and rural areas, especially as people start to travel home to celebrate the upcoming Spring Festival later this month.
A quick recovery, though, can be expected once the situation comes under control, say experts, with many adjusting economic growth forecasts for 2023 upwards to above 5%, although more policy support is still needed.
It just looks like the timeline is quite unclear. Before the 2 sessions in March, we don't anticipate any major policies coming out. Now it seems that the monetary policy and fiscal policy have both been quite conservative, and the lack of liquidity in construction, in real estate, is still quite widespreading.
But Ms. Wang says there could be other challenges as the global economic outlook remains gloomy for 2023, with the war in Ukraine continuing with no end in sight.
Even for the U.S. economy, which is a major destination for China's exports, is slowing down in a significant way. So that means when China is in full recovery, probably later this year, there wouldn't be enough demand from overseas market.
This also as China continues to grapple with other economic challenges, like its struggling real estate sector. Olivia Xiong, CNA, Beijing.